Amazon went from $112 to $6. If that occurs, if that same percentage drop occurs with Bitcoin, you're going back to $3,000 or $4,000. If you go back for the last 20 years, right, or even go back to like 99, 2000, which is the dot-com bubble that finally burst in 2000, there was this ability for the Fed to just print us out of every recession. So if things got tough, if the economy started to slow, they could print money because inflation was 2% or lower. Right. So that was their go-to plan. You saw it in after 2000 when the dot-com bubble burst. You saw it in 2008, 2009, and then you saw it with COVID. Right. So all these kind of things occurring. Now, the big issue for me is that with 10% inflation, you can't just print money anymore because it's only going to add to the problem. My fear is that that's going to cause the economy to come to a screeching halt and push us into recession. But then how do they get us out of that, right? I mean, yes, they could bring interest rates back down, but can they print money anymore? They really can't. So again, this is a new phase that we're in terms of the last 20 plus years, really going back to the 70s. And in the 70s, interest rates got as high as 20%. I mean, if we put interest rates at 20% right now to curb inflation, we would be in a depression. If you put interest rates that high, it would create a massive slowdown and a massive kind of, everyone, basically even me. I mean, I make a lot of money trading, and if you're going to tell me I could get 20% on my money, I'd probably consider just parking it somewhere and just going to the beach every day, right? So there's an incentive to park money and not utilize it for investments or to grow capital and so forth. The dollar is definitely of interest. I mean, for me, that's kind of where I'm focusing in on here. Let me take a look at the DXY and I can show my chart. And the dollar has stayed relatively strong, which makes sense because of the problems going on with Russia, right? When there's uncertainty, people run for the dollar because it's always been a staple of safety. Now, in the near term, I think that's going to continue. So as long as you have this kind of fear factor out there about Russia, about China, maybe, people will buy dollars for safety. However, longer term, that's not going to hold up. One of the things I'm seeing is you actually do have a bullish consolidation pattern here. So there might be some more upside on the dollar. I see a maybe move to just shy of 101. And then if it gets through that, you could be looking at 103. But again, we're getting a little extended here short term. The underbelly trend line right here would be something I would watch very carefully. If this line ever gets broken to the downside, that's where I would start to get very nervous about the dollar in the midterm. It's when you have every major economy printing money like the Federal Reserve has, it kind of just keeps everything on an even keel, right? So, I mean, that's the main problem, and why you're probably not seeing more weakness in the dollar is because relative to the yen or relative to the euro, all these other countries are doing the same thing that the Federal Reserve Bank here is. So I think that's why you don't see that. But again, long term, I think it's unsustainable. Eventually, Bitcoin takes over. It might take years, and I think it will take years, but eventually there's going to be some sort of new order of currency that emerges as the staple and really probably the reserve currency of the world. So you definitely, number one, speculation goes with use of margin and kind of leverage. So we know those two go together. And then inflation is kind of the one that sometimes hasn't been an issue. And if you go back to like 99, 2000, the dot-coms, you didn't really have inflation at that point. Obviously in 2007 and going into 2008 and 9, you didn't have it as well. Going into 29, the crash of 29 and the depression, that's basically the same. So I agree that the inflationary side of things has not been in existence really for maybe ever in this country, at least since we've been tracking it. And I think that's important because, again, what does inflation do? Well, how do we get out of recession? So let's just say that what we're seeing does come crashing down. And the answer is, well, the government usually spends us out, right? I mean, if you look at wars like World War II, after World War II, all these different things, the government came out with these new deals, these different things to spend us out of recessions. Well, again, how do you do that when you have this 10% inflation going on? That's the question. And I do agree that we have seen the biggest speculative bubble in history at this point in the markets, in crypto. It's one of the reasons why, as much as I love Bitcoin long term, I think it's going a lot lower before it turns around and goes much higher. Yeah. So here's the Bitcoin chart. And again, the one of the things, or many of the things that have pointed to my calls about Bitcoin coming down, and then really what we're forming right now is a classic bear flag, which we can talk about in a minute. Let me get rid of these trend lines here. But basically what's going on here is that you still have too much leverage in the system. And I'm a big believer that as much as I believe in cryptocurrency and the blockchain, in what it kind of will become in the future, the same thing was being said about the dot-coms, right? I mean, again, I grew up in the dot-com era. That was when I first started investing. And, everyone was like, oh, the internet's going to change the way we live. The internet is going to revolutionize things. I mean, this is huge. This is the way of the future, the wave of the future. And they were all right, but it doesn't stop bubbles. In fact, it perpetuates bubbles to be formed because everyone chases them, and then eventually fear takes over and the collapse occurred. So you saw stocks like pets.com go bust, essentially. You saw Books A Million. I mean, there were so many crappy companies out there that just got annihilated. And then you look at crypto today, and the same things are being said about cryptocurrency. This M pattern right here is the same pattern that Amazon had back in 2000 before the dot-com bubble burst. So, I mean, there's so many similarities in the crypto markets that ultimately, and think about this, by the way, now there are over 15,000 cryptocurrencies out there. A lot of them, who knows what they do? They're either meme coins or they're either, I mean, you need a washout, and a washout is healthy. Anyone who's a real fan of crypto wants this. And I know it's not popular because it doesn't make people money instantly and everyone wants to be paid instantly. But when you wash out the junk, the strongest, it's very Darwinian, the strongest will survive and thrive. And that's my belief, is why we have to go lower. You have to see this flush out. You have to get rid of the crap out there. I want to see only 100 cryptocurrencies survive, honestly, and then those can thrive and have real use cases in our economy. In terms of the chart on Bitcoin here, this is a classic bearish consolidation pattern. It ultimately likely leads to Bitcoin at around 20 or sub 20,000. I'm not sure where it'll bottom out, but I do think when it gets sub 20 or around 20, you'll see a lot of the other coins going kind of bust, and that's what we have to see. Previous winters for crypto have seen about an 80 to 85% decline in Bitcoin, right? So if you map that out, it takes us to kind of that 13 or sub 13,000, right around 10,000, in fact. And then there's a lot of people that are now talking about the potential to see a kind of a correction, and I don't know why my line is that big. Let me get rid of that. But this would be your first target. So the 2017 high, which, by the way, you've never had a cycle where Bitcoin has retested that previous high. Now, the problem with that is that Bitcoin has never corrected in a winter less than 80%. I mean, if you go to 2013, 80+%, 2017, 80+%. So one of these is going to be incorrect, right? We're either going to go below the 2017 high and do 80% or 85%, or we're not, and then it won't be a true winter. But I'm in the camp that we go down, we see major support at the 20,000 level, but then ultimately we probably go lower. One of the things to just keep in mind about Bitcoin here is that if you map it out with what Amazon did, you look back, I think Amazon was the Bitcoin of its generation with the dot-coms, right? It was the biggest company. It's a $1 trillion company. It's kind of where we want to see Bitcoin down the line in 20, 25 years, which was, again, 20, 22, 23 years ago when the dot-com bubble burst. So I think that's the key. But Amazon went from $112 to $6. If that occurs, if that same percentage drop occurs with Bitcoin, you're going back to $3,000 or $4,000. So again, this is kind of a worst case scenario for Bitcoin, but I do think that as an investor, we have to be aware of it. And we don't want to be fear mongers, right? I'm not trying to be fear mongers. Hopefully I'm wrong. Hopefully it never even goes to 20,000. But again, there are way too many issues in the crypto market. The NFTs are a bubble at this point. I mean, there's just so many out there that have to be washed out before the crypto market can get healthy again. And I think a lot of investors in crypto, they like to keep their head in the sand, where it's like, oh, like even when we were at 65,000 and I was saying, hey guys, I think we're going to have a big drop here. I got the, oh, we'll never see below 60. Then, oh, we'll never see below 50, and then 40. And then, and the bottom line is anything can happen at any time in any market. I mean, God knows we've seen nickel go from 20,000 to 60,000 plus in a matter of days. We've seen oil go from 95 to 130. So anything can happen, right? And I think you're right. You have to diversify. So for instance, gold, you could have been invested 50% in Bitcoin since November and 50% in gold, and your losses would not be that bad because gold has done very well, and then you only had 50% in Bitcoin. So yes, you'd be down because Bitcoin obviously has taken a bigger drop than gold has gone up, but it shows you that diversification can protect you. And I think that's so important to understand. You don't have to be one and done. You don't have to be all in on Bitcoin or all in on crypto. A smart investor who wants to build real wealth and avoid cataclysmic collapse, you need to diversify your portfolio. So I hope people learn. I know there's a lot of new investors in crypto over the last couple of years, but you have to understand that the markets do things that even I don't realize. Like, I've called low pivots, and then in a short amount of time we go way lower, and then yeah, we bounce back and I'll end up making money, but the stock may go 20% below my initial entry. Luckily, I've learned my lesson to slowly inch into positions and DCA so I don't end up getting crushed, and then I can make money that way. But the markets even blow my mind many times. The government has enjoyed the ability to kind of print when they want to, not necessarily having to have reserves or anything like that. So I'd be somewhat shocked if we ever go back to that point, but I do foresee that at some point when the dollar does collapse, and you're going to see the Federal Reserve take a huge amount of that blame, the government will as well, and the people will rise up and say, hey, listen, the government, we need to fix the financial system. And I think from that's where some sort of new cryptocurrency comes into existence that supplants the dollar. Now, I don't think it's going to be Bitcoin. I think Bitcoin is going to be the digital gold for the next 50, 100 years. But I think some sort of new cryptocurrency that is controlled by the government, but there are restrictions, meaning that it can expand at X% per year, but it's stated and the people understand that. And I think you also will see the government being forced into a balanced budget type scenario where you don't allow these ridiculous deficits to continue. So again, it's almost like a little bit of a reset. I still think it's 10 years away at earliest, but it might coincide on a cycle with the 100-year cycle of the Great Depression, where we go through this kind of epic dollar collapse, and from that rises a new financial system that is kind of based on cryptocurrency.